Hey everyone, it's Kirk here again at Option Alpha. So I want to go over in this video some really unique new backtesting that you can do because we pushed a new update over the weekend to include a lot more events that you can filter out of your trading. So a lot of people have asked for this. Can we filter out CPI and Fed events and also jobs reports and all these different things? So we added a ton of that to the backtesting database so you can filter those out. I want to go through some of those here in this video to show you maybe you should be or maybe you shouldn't be avoiding certain events for your strategy. So here is just a very general short put spread just so I can show you how this works. So this one right here is our traditional put spread. This one we ran before, but we previously had the ability to filter out FOMC meetings, which that was kind of standard. That was always in there. So that one is this one, just filtering out FOMC meetings. So what you can do now, though, is you can filter out a lot more events. So if we want to run a new variation of this, we're going to go up to compare. Then we're going to go here to the three dots on this backtest, go down to add variation. We're going to run the exact same strategy this time, but this time we're going to start adding new events. So you can see there's a new event category here. There's a ton of new events that we're adding in here. So we added a bunch of these. This full moon one was kind of a funny one, but you can certainly test it. But we did add full moon one in here because a lot of people had requested that one as a fun one from our live event in New York. So we said we were going to add it. We added it in there so you can test full moon. But a lot of people wanted these ones like CPI, PPI, PCE, non-farm payroll, triple witching, blah, blah, blah. So you have those now as the ability to filter those out for your trading. And the logic behind this for a lot of traders is, well, these are market moving events, so the market tends to be more volatile on these days. Therefore, I don't want to trade on those days. Now, of course, every strategy is going to be completely different. Go in there and backtest like crazy. You've got unlimited backtesting with Option Alpha, so go backtest like crazy. But I wanted to run through a bunch of different examples, and I'm also going to test my own strategies that I'm running currently to see if I should avoid these events as well. So what I'm going to do here is I'm going to throw in just one additional filter for FOMC and then non-farm payroll. So we'll run that test first. So we'll do FOMC plus jobs report and give it a good description so you know what it's doing. As always, I like doing this. So we'll filter for that one. And then while that one's running, we're going to do another variation here. We're going to add this one here, which is going to be FOMC, CPI, PPI, PCE, etc., triple witching, all the regular ones. The monthly, end of quarters, end of weeks, I don't really consider those in the same category as these ones. These are kind of the more, market moving events and kind of news. So when I say filter out all events, for me, that's mostly those, but you can filter out those other ones. And then, of course, you're going to run this one and say skip all events. So all major events. Go ahead and just run this one. You can see that while that one's running, that first one got done, and basically FOMC and jobs report was effectively the same. I mean, it's a little bit different, but you generally had about the same performance. Not a meaningful difference by any stretch. If you look at it now, skipping all events in this case, this is actually very interesting. You skip all events, you did significantly worse across the board. Now, what you did do in this case, and this might be good for you if you wanted to run this strategy, is you did have a smaller max drawdown. So your max drawdown was a little bit less, like peak to trough at any period. And that doesn't mean you avoided drawdowns, just mean it was a little bit less. But you did give it up significantly in performance. You can see that the performance underperformed. So in this case, it looks like, skipping all of the events, although you might sleep better and it might be better for your stress level for skipping all the events, from a strategy standpoint, with this one, it didn't look like it was actually a good idea to do that. So just for fun, let's test the other one. I'm going to test the full moon cycles. So let's take these ones off. We'll just do these. We'll take all of these off. We'll just test full moon. I don't know what this one's going to do. I have no clue. So avoid full moons. Maybe with Halloween coming up, maybe it's actually a good idea to avoid full moon strategies. So we'll let that one run. But again, this is what you want to do for your strategies. You want to test these. Actually, it actually did better. So if you just avoid full moons, you actually did better than avoiding all events, which is kind of crazy. But if you didn't definitely have the largest drawdown, so that's not good, right? So maybe that's the black cat in this one. But full moons, performance-wise, did better than just avoiding all of the events in total. So it doesn't matter. You can test out a lot of different variations. Again, I tested a bunch of different variations for this one. I also tested one that was another variation of this. In this case, this was an orb strategy that I was testing here, but you can see avoid all events. This is FOMC only. So this is FOMC only up here, which is the orange line. And then FOMC and jobs report, again, the orange line, very similar here. And then on these ones, avoid all events was the standard here, which was the blue line. That was underperforming. Also X FOMC, so everything but FOMC, just testing that variation too. Again, underperformed for this one. If I look at my own strategies, and by the way, I'll have links to all these in the show notes and the description right below this video, so you can take a look at these if you want to for yourself. These are the strategies that I run right now on my 0DT, 1DT portfolio. I've gone through these in previous videos, but I also wanted to run these on avoid all events. All of mine are set up always to avoid FOMC. That's by default, mostly because these strategies are entered in the later part of the day. So that's definitely when FOMC comes out. And so I don't want to trade those days anyway. So that's been by default from the beginning. But I also did test avoid all the events. So this is my 230 iron condor that just runs and goes all the way to expiration. I tested avoid all events. You can see dramatically underperformed. So I'm actually better off trading through all of these events than avoiding all of them. This one's the 150 iron butterfly that I run. Again, this is with a 40% profit plus avoid all events. So this one underperformed. There were some periods for this strategy where it performed better, but net at the end of the day, it actually was a little bit better performer to just trade through all of the events. This one here is one that I run, a newer one. I've talked about this one before in previous videos about going through and potentially improving the strategy and not going so wide on it. I think I covered that in the last one. But this one here is, again, a wide iron condor, 2:30 in the afternoon. And it was meant to, again, pull up the win rate of the portfolio. I'll have a link to that video in there so you can take a look at that one. But if I avoid all events, the disparity here is pretty significant. I mean, you just avoid too many trading opportunities. This is probably the most significant one. The P&L difference expected from these two strategies is significant. So essentially, you're getting paid for the volatility and the risk that you're taking by a wide margin in this case for this strategy. Now, again, it's not for all strategies, but I'm sure there's going to be some that don't do it. But in this case, for all the ones that I'm running right now, this is my last one. This is my 1 DTE iron condor strategy. So this is next day. Again, this would be trading through some of those events. This one was kind of the most meaningful one to me because if I'm trading through those events, some of these things are announced after the close or before the market open the next day. I'm kind of really taking that full, risk of that position going through those days. And again, you can see the disparity here is pretty significant. So for a big disparity in P&L, you didn't really have a big difference in your maximum drawdown. Your profit factor did not improve. Your win rate slightly improved, but not by any meaningful amount. So again, it was a really big one here that just kind of shows me, at least for the strategies I'm running, generally speaking, you're getting paid for these events. So if you're kind of thinking to yourself, should I avoid all of these events? I would say right now the default is probably not to avoid all of the events. Maybe FOMC, maybe jobs report, but some of the other ones looks like you could trade through them. But again, test your own, add links into the community, share it with us. Let us know what you think about this, but I hope this one helps out. Again, we'll have all the links right below this video so you can take a look at these backtests yourself and run your own. Until next time, happy trading.